Okay, guys, so you're welcome to my YouTube channel. My name is Dr. Harmonics. So if this is your first time visiting my YouTube channel, don't forget to subscribe to the channel and smash the like button and press on the notification bell so that you'll be notified when I upload my next video. We are on the live session. This is on the chat with Dr. Harmonics. And the market has been very volatile. It goes up and down this afternoon. And we want to look at some of the opportunities on the market. Let me hasten to say that we have the upcoming Smart Forex Trading course for beginners and intermediate. The course is actually free of charge, but because we want only serious people to to be admitted in the course, we decided to put a small price tag for serious people to join. And trust you me, it's worth more than what you are paying. So we only want serious people to join. That's why we decided to add. Normally we do it for free, as giving out to the society. Okay, so that's what I have for you. Let's jump onto the chart and see what is popping. It's all about money over poverty. This afternoon has been ups and downs. We see the market going up. People will be buying, then it will come down, then people will be chasing the sales and other stuff. Now, I want to open the charts like any experienced trader would do. I want to combine the different theories and teach you or show you what I'm seeing on the chart. Mostly the patterns that are forming or the levels that are forming are mostly smart money concept levels. But you know me, I combine both smart money, Elliott waves and harmonics together to give you a very good strategy. And when we get a trend, we use our 1.0 Fibonacci extension strategy to give you a perfect setup. So if you are not on my Telegram channel, don't forget to subscribe or don't forget to join the Telegram channel to have the setup that you desire, so that you can also you can use it as a guide to when you are trading to also make some informed decision. My name is Dr. Harmonics, your favorite mentor, and let's roll to the chart to see what the chart is looking at this afternoon. Okay. Okay. So the first, I think today we are looking at let's start with the dollar pairs. Let's start with the dollar pairs. So let's start with the dollar pairs and see what is happening. Okay, so let's look at DXY. Let's look at DXY. Now, DXY is still at a perfect zone, a perfect support zone. Now, this level over here is on the 50 FIB. You can see that it tied this level and it's also tied this level. Now, previously, I told you guys that this pattern that we had, the general pattern for DXY was on a bullish trend for a long term, okay? We have DXY. This whole pattern is called it's forming a sharp or cipher pattern. Now, when you come to the daily time frame, we're able to get another pattern over here, which this pattern are harmonic patterns, but I have reformed it to, I mean, with my years of experience on the market, I'll be able to find some harmonic patterns that really work. I'll be able to adjust the fib levels to a perfect fib levels that can give you better confluences. So whatever you learn on YouTube, you learn in books and other stuff, it might not necessarily be the same thing that you learn from my strategy courses. Now, we're able to get a deep crab pattern formation over here. And when with deep crab pattern formation, you realize that when you measure the fib level, this level is at 50 fib. Now, I keep on telling you guys that if this one is going to form a zigzag, then we were supposed to get something like this, okay, then get something like this and then drop to 61.8. But the way it came straight, and also and it's also giving us some sort of ending diagonal over here. Now I'm expecting DXY to push up. Now, if it push up, then I'm expecting a flat pattern formation. That means that I'm expecting to go to maybe touch the weekly high and also drop to 38.2 Fibonacci level. You can see that it's also at a very good level because you can see it touching over here, touch over here, touch over here, touch over here. So I'm expecting to move up all the way to the weekly high, then reverse back to form. It can even, this high can even break it, okay? This high can even break it. Yes, it can even break it, cause some liquidity grab over here. And this kind of correction is called the running flat correction in Elliott waves. So when you do STR strategy course, you'll be learning the types of Elliott wave corrections, the simple one where we have the zigzag, flat, and triangles. You learn all these type of corrections. So it can break this level to and even exceed the previous high and drop back to the 38.2 to form a running flat correction before it goes up. Now, this up movement going will align with the monthly time frame where we are expecting price to ride all the way to the top over here to complete the shark or cipher pattern. Okay, so the pattern that you saw in the daily time frame is the small one that we are seeing over here. Okay, so the small one is this pattern. Now we've seen a correction, so it has to go up. So give us a correction, go up all the way to go and complete that pattern that we desire on the monthly time frame. So that's it for DXY. So I'm expecting more bullish. I've been bullish on this pair for a long time. I thought, I was hoping that today would be the day that we see that bull start for a long term. There's been some mixed reaction with the dollar pairs, but just focus on your strategy, just focus on your trading plan, and don't forget that the trend is always your friend. Now, when you are doing price action and you see an impulse leg, you remember when you see an impulse leg showing down, okay? If you see an impulse leg going down and the correction also going down, okay, you should know that we are expecting price to break up. We don't expect price to break down. We are expecting price to break up. So whatever you do over here, in the long term is going to break up. So I'm more bullish on the dollar. That's why I'm more bullish on the dollar. Now, let's look at some of the dollar pairs. That means that I'm trading only dollar pairs. Now, USD CAD. And there's one thing you should also note. When a trend is about to complete, normally look for double bottom or so that the types of double tops and double bottom. We have double top or double bottom with equal highs or equal lows. We have one with truncation and we have one with a liquidity grab. Now, during turning point, when you realize that your market has reached the level where you should have a reversal of the whole trend, normally don't just jump in, wait for price action. And at the point of price action, you either wait for double top or double bottom, the one with the equal highs or lows, or look for the one with the truncated. Don't look for the one with the liquidity graph, because that one will be a break of market structure to the top or to the down. So look for the one with the equal highs or equal lows, or look for the one with the truncated. You can even look for divergence at that area and see whether you can make some meaning out of that, okay? You can look for divergence around that area. Okay, so let's look at what is happening right now with USD CAD. So USD CAD, I showed you on the weekly time frame. Normally, I like to take my trades from the weekly time frame all the way. Now, the analysis I'm doing is not on the smart forex trading course. The smart forex trading course is basically the classical chart patterns, the head and shoulder, double top, double bottom, the cap and handle rising. These are classical chart patterns. That is the patterns as a beginner or intermediate, you should know how to use. But my analysis is based on the combination of both the STR strategy and the classical chart patterns. Okay, and the STR strategy, you have some level, you have some points where you are going to use smart money terms, smart money concept, points where you'll be using Elliott wave concept, at a point where you'll be using harmonic patterns. Okay, so let's look at what we have for USD CAD. Okay, so for USD CAD, we still have now these patterns, you just don't draw it. Okay, it's not a matter of you drawing it as you want. No, it comes with its own rules. Okay, and I keep on showing you in all my okay. So I keep on showing you, and guys, a minute. Okay, so now what's happening over here with USD CAD? When you draw your pattern from here, okay, this is on the, okay, let me, Okay. Okay. So this is on the 50. Now the D is expected to hit the 88. You can see it over here, 88 Fibonacci level. This is 88, the 88 or 0.886 Fibonacci level. Now this is where I expect USD CAD to reach. Okay, this is where I expect it to reach on the higher time frame. Now that means that we are expecting it to go up. Okay, now let's go to the 4-hour. Now we are having some equal lows. We saw some movement up, okay, but I think it will trace a little. Now, what I'm expecting over here is to have, this is a bullish market, and we had a reversal. Now, when we put our Fibonacci level over here, this on the 78.6 is a very good zone. So actually, I'm expecting this level to break, okay? Even look at something over here. Now, you can see the market moved over here, okay? Okay. Now, there was a break of market structure on this level. It formed more or less like a truncated bottom over here. So we are expecting it to go up, okay? So over here, I'm expecting USD CAD to fly all the way to the top. Now, that means that your first target, you are targeting this level. And if this level should hold, you can find a harmonic pattern over here. Now, when you bring your fib here, it's on the 50 fib. So that means that in the short term, you can come and hit the 1.38, forming a harmonic pattern over here. Okay. Okay, so in the short term, so the first take profit will be at the B of the harmonic pattern, okay? And the second one will be on the 88.6, forming a bat pattern formation. Okay, so that's what I'm expecting for USD CAD. So I remember one of my students said that the reversal will happen on the 23rd, and it's happening. Okay, so let's look at other pairs like USD CHF. Now, USD CHF, I'm expecting it to move a lot more higher, okay? Now, on the daily time frame, let's go see. We still have the ending diagonal over here. It tied there, tied there, tied there. This is an ending diagonal, okay? Now, the whole formation is based on Elliott waves. Okay, now this Elliott wave correction, all the movement over here was the impulsive leg. From the down all the way to this level was the impulsive leg. Now the correction just happened this way. Now we have the first ABC correction. So it came on ABC, another ABC, and we have a 5 waves down. Now, what we are having over here is an expanded flat correction over here. This is called an expanded flat correction. So this correction is the whole correction for the impulsive move all the way from here. the whole impulsive move over here, this is the correction to that impulsive move. For every impulsive move or for every actionary wave, there should be a reactionary wave. Okay, the market will not go in a straight line. So for every actionary wave, there should be a reactionary wave. Now, when you put your Fibonacci 2 over here, you see that, even let's take it up a little, you see that it was around a 61.8. Now that is where we had our ending diagonal at the end of the C leg of the correction. When I say C leg, that means that from where the impulsive move started, A, B, and C, this is the ending diagonal. This is the C leg, and this is the end of the full correction. That means that for any breakout that we are going to see over here, we are going to the top. For any breakout that we are going to see on this leg, we are going to the top. Remember, we saw DXY as we have a bullish bias on DXY. So now let's go to the lower time frame. Now, when you go to the lower time frame, this is what you are seeing. Now, there was a break of structure. There was a break of structure which formed a higher high. It came down to the demand zone. Now, when you put your FAB, let's put our FAB from the start of where it was to this level. Okay, so it came down. You can see that once there was a break of structure over here, okay, there was a break of structure over here. That's smart money, right? There was a break of structure over here. Now it came down to the demand zone. We had a very good point of entry. Our first take profit is here. Now, where do you get our second take profit? Now, what you can do as a day trader or scalper is that you use your Fibonacci extension level. I thought you on live session on Instagram and Telegram. So use your Fibonacci extension, trend-based extension. Put it here, and you target your 1.0 Fibonacci, which is here. Okay, so that means that if you had entered over here, now your first take profit is here, which should have hit your take profit, and your second take profit is the 1.0 Fibonacci extension level. Okay, and this one, I'll teach this strategy in the Smart Forex Trading course. This is a beginner strategy, how to use Fibonacci extension tool as a strategy. I'll teach it in the Smart Forex Trading course. So if you've not subscribed to the Smart Forex Trading course, make sure you subscribe. Okay, make sure you subscribe. Okay. Now on the higher time frame, we expect it to go very high. So I expect dollar to go USD to go very, very high. Okay, I expect it to go very high. There are levels you can see over here. There are some levels over here that it needs to respect. You can see that I touch here, touch there, touch there. So it can even extend all the way to this level. Okay. Now when you go to the back, you see that it tied there and it tied there. So you can also come to this level. You see here and here, okay? So you can also come to these levels. So we should be respecting this level. So USD CHF, I expect more buys for USD CHF. Okay, I expect more buys for USD CHF. Okay. Now let's look at the other pairs. I'm even expecting this one to form a harmonic pattern. Now, that means that if this one is able to get to maybe these levels, okay, these levels, what I'm expecting is that it can do this, okay, at 61.8 and go up to form a harmonic pattern, something like this. But the type of harmonic pattern that I don't know yet. Okay, so I'm expecting something like this in the long term. Okay. Okay. AUD USD. Now, AUD USD, let me show you something. Why I'm so biased on AUD USD. Now, you can see that there is some level of the imbalance over here. It's almost filled, like there was an imbalance over here, which it's filled over here. Okay, so I expect this one to move down. Now, in the short term, let me check the weekly time frame. Yeah, so I expect this one to still move down. Now, in the long term, okay. This looks more like a running flat correction. Okay. This looks like more like a running flat correction. So, 61. This one can come to 113. Either it can come back to the support or it can come to the 113 field. Now, if this is going to fall, if this is going to fall, then I should be expecting, it has already formed the cipher pattern, but I expect it to come back to this zone or go to the 113 to form a sharp pattern formation. Okay, so if this is going to form a sharp pattern formation, then on the legs of the harmonic pattern, which is this level, now remember, look at this. You can see that it has not closed well. This thing can even close in negative by the end of the day. Look, I don't see much support over here. Look at the candle. So I'm even expecting that this thing can even close negative at the end of the day. You understand? So there was an imbalance over here, and it came to touch the other block over here. You can see this other block came to touch it. So this one can even go down by the end of the day. Now, when you come over here to on the 1 hour, this is the last candle. Okay, so this can even sell over here. Now, there is something you guys need to do. You guys need to see. Now you can see that we have all the way here. Okay, all the way here. We have swing highs. This is breaking market structures. It's breaking market structures. Now, this was a break of market structure because it broke this level. Instead of it going up, it formed a truncated, this is a truncated double top. That means that I told you that when you are looking for reversal zone, make sure it's either truncated or equal highs. Now, this looks like touching another block here. For me, remember, it can even come and form equal highs. It's possible. But at this point, if you want to pick a trade over here, it's also a very good place to pick a trade. Okay. Then maybe your stop loss above the highs. Okay. Now, this will also mean that if you should sell from here, then, okay. If you want more confirmation, you can also draw your lines. Now, when you are drawing a line, make sure you change it to line chart. You can change it to line chart to get a perfect, okay. Okay, so it's either you can wait for it to break here and you join the sell. Now, what you can do with this pattern is that this is where the buy started. Okay, you can use this one as the point where you use as your X. Either you look for a harmonic pattern from, either you use this one as a harmonic pattern, 5088. So there are two ways you can use this one, where the break of market structure becomes the B, the retest, and you get to the 88 Fibonacci level. Now, remember I said this was a break of market structure, you can see. So it broke this level. So that forms the B of the harmonic pattern. And this one, I identified it with my years of experience. Scott Carney didn't identify that the B should be the break of market structure. So you should know that. Now, you can use harmonic patterns to identify where your trend should get to. Or you can use basic confluences or levels to gauge your TPs. Now, your first TP, you can see that this is a key level, okay, and it's also a key level over here. So you can draw your line here, okay, as your point of interest. The second is the neckline, okay. It tied there, and it also tied here, okay, as your point of interest. You can also look over here, here as a point of interest. Okay, so it depends on how you want to, the kind of analysis you want to, whether you want to use basic price action or you want to use harmonics. I've not used Elliott waves in everything that we want to do over here because Elliott wave is more advanced and people might get confused over here. So I'm just using simple price action and harmonics over here. Now, let me also say that on 30th, I'm starting the smart forex trading course for beginners and intermediate. So if you want to learn price action trading, okay, if you want to learn price action trading, you can enroll. We normally do it free, but this time we decided to add a little bit of $25 to it so that to get serious people. We don't want to admit people who will be putting negative comments on the Facebook page as if $25 will not do anything to me. Look at my office. See, look at my office. I want to show you guys from here. You guys, I want to show you guys something. Look at my outfit. We are talking about it. This is just that. From here to the last stop, to the last thing, is about 5. This goes for it is about 10 shops together. And about 5 shops together. We are talking about $25. When I pay $20,000 a year for my space. Anyway, I'm just giving back to the society, and so those who would want to come for the face-to-face session will get the opportunity to also let me do screen recording. So those who get the opportunity to come face-to-face will also have a feel of my space. Those on YouTube, unfortunately, you didn't see my office, so bear with me. Okay. Now, those on Instagram actually would have seen my office. Okay. So this is what I'm expecting for AUD USD, pound USD. Now, pound USD, we caught the sell at the top over here. We caught the sell at the top over here. Now, this is it. Now, this one, there was also an imbalance over here. Okay. There was an imbalance and it went to fill the imbalance. Now, okay, so what's happening is this. Okay. These are Elliott wave corrections. Now, this is more or less like a diagonal. Okay. Now, this is more or less like a diagonal. Okay. For pound USD, let me show you guys something. $61.8. Okay, it has reached the 88.6, but I expect it to go down to the 113. So I expect it to come to the 113. Now, if this one should come to the 113, then let's go to the lower time frame to see what is happening over there. Now there was a break of structure here. Let me show you guys something. Now this structure is broken, so I expect it to come down. Okay, maybe to this level. Okay, there is break of structure here. You can see that this structure is broken. Now, if this one should come down, then that means that around this level, we should have equal highs, and this is the equal high. Okay, this is the equal high. Now, so we're able to find an equal high here. Which tool is that with the two triangles like a butterfly? And how do you use it? So if you want to understand Gemimumo, whatever, Gemimumo, okay? So this is harmonic trading. So if you want to understand the way I do my analysis with fibs and numbers and calculations and all those, then make sure you join my STR strategy course. The STR strategy course is my own strategy. So now you can see that there's break of structure here. Okay, so there is an equal high over here, and that means that this is a point of interest. Okay, you can see it here. So because you should touch here, and touch here. Okay, so I'm expecting to come all the way down. Okay, at least let me see it around let me see something, 38 to 88. So yeah, these levels, it can come all the way down, but you can even put your fib level here. You can even put your fib from here to the top, and let's say target 61.8. Okay. But I even think it should come all the way to 88. I'm even looking at 88 because it's possible it might form a pattern, a bat pattern formation, we should give us something like this. Okay, so by be checking these levels, the neck level, the B level, and other confluence levels, other level of confluence. So here, okay, so target. So you should be looking at the break level first before you would also come to these levels. Okay, these levels. Okay, so be targeting these levels. Okay, so I'm now let's go to the lower time frame. Now look at what is happening here. There is a break of structure. Now this is a break of market structure. So when you put your fib here, it's around 61. So I expect it to drop more. I expect it to drop more from here. Okay. I expect it to drop more around the zone. I expect it to drop more around the zone. So we might see more, or it can come back to this zone, okay, because there are some others over here, can come back to this zone and drop, or it can just drop off from this zone, okay. So within this zone, we should be looking for more selling opportunities to the down, because we had an equal highs over here, okay. We had an equal highs. So look for more selling opportunity around this. NZD USD, the same thing, is giving us equal highs. Now it came to fill the imbalance here. It filled the imbalance. There was an imbalance, and so this the sell side liquidity was filled, and look at this, it has filled it, gave us an equal high. Okay, it came to touch the other block, the last bullish candle. Okay, so I'm expecting a sell of this pair. Looking at this, so first of all, I'm targeting the B leg or the neckline, which is this level. It also tied this level. Okay, so I'm looking at the neckline. It can come all the way down, okay, or 61.8 or 50. If it will go up, then that means that it has to come down before it will go. I don't expect it to continue. The worst scenario, in the worst scenario, is that it should form a flat pattern formation. And flat pattern formation, we have something like this, okay, and something like this. So even if it should go up, it will come here before it will go up. Okay, so that's it for NZD USD. I think we've tackled all. Gold dropped. So I was expecting to go up a little before it dropped, and it did that. It did perfectly that. Okay, so gold, I'm not analyzing gold because it's not giving me a perfect. This level was broken, so I'm not analyzing gold. It doesn't give me a perfect, unless I get a harmonic pattern. That is the, let me check this one. Okay. So gold can be like this. Let's measure from here to here. It's on the 61.8. Okay. Now, if it should break, because the reason why I think it might sell is We add this. Okay. Break in market structure, retest. Even if it will go up, it has to retest before it will go to form a harmonic pattern. Even if it will buy, you have to see that big drop. I don't see it going all the way up like that. Okay. I'm even seeing something different. Let me see something. Okay. Yeah, so even if it will go up, I want to see this big drop. Okay. I want to see this big drop. Now, so we are just waiting for that drop. Okay. And if it can come to 78.6 or 61.8. Okay, so from here, we are just looking for price action around this zone. Now, let's see whether we'll see any price action. Okay, so there is price action. Now, you can see that there is divergence here. Okay, there is divergence. This is giving us higher high. It's giving us higher high, but this one is giving us lower high, so there is divergence. So you need let's see a break. Let's see a break and a retest and join. Okay, let's see a break of structure. So if this one maybe something like this, I don't want to rush to jump in. So let's say this break of structure, come back to the demand zone, then we'll join to the downside. Okay. So that's what I'm looking at. That's what I'm looking at. Okay. If you're enjoying it, just type, if you're on Instagram, just type money over poverty. MOP, just type MOP if you're on Telegram. If you are on Instagram, just type MOP. If you want to join my Telegram page, just type so I'm sending the link to my Telegram page. So once you join this Telegram page, make sure you look for a link to the chat room too, so that you can join the chat room. Okay, make sure you look for a link to the chat room too, so that you can join the chat room. So I think I'm done with almost. Is there any pair that you want us to look at? Because I'm done with almost all the dollar pairs. Let me see Euro AUD. I'm just picking random Euro AUD. Wow, let me see. Okay. AUD JPY. What do you see on AUD card? On JPY. Okay. So someone is asking for GBP JPY. Let me see whether I can. Okay, I think GBP JPY, I've analyzed it already. It was. So I think I did some rough analysis. It's quite tricky around that time. So we picked a trade around this level and I was expecting it. So this was a typical Elliott wave analysis. Now, this was wave one. The wave one gave us an ABC, a leading diagonal. So we had, okay, 1, 2, 3, 4, 5. We had a leading diagonal on wave one. Okay. Okay, then, okay, so wave one, let me change it to primary. Okay, so we had, you see, when you go to trading view, there are a lot of tools and a lot of mentors run away from. You see, they brought these tools for a purpose. These tools are meant to be used, but traders don't like the hard way. They want the soft way, and the hard way is what will make you see the chart very perfect. Okay, the hard way. Because if Forex was that easy, like everybody would be a millionaire. Trust me. If Forex was that easy, like everybody would be a millionaire. When I'm doing analysis, it's like 50 years on the chart that you are seeing. You think TradingView brought those tools on the chart for no reason? There are tools for Elliott waves. There are tools for harmonics. There are a lot of tools that we don't even utilize them very well. And if you want to master all these things, you see that you need to come and learn. And trust you me, if I'm doing, people think I'm charging $25 because that's the price of the Smart Forex trading course. The Smart Forex trading course is for just beginner intermediate. And what we teach in the Smart Forex trading course, when you go to other institutions, that's what they teach from beginner to advanced. Because the advanced level ends at price action trading, the classical chart patterns, head and shoulder, double top, double bottom, or maybe they can extend it to smart money concept, and that's it. When you get an opportunity to learn Elliott waves, harmonics, these are, Charlie, you guys are missing out there. So let me try and show you something. Now, you have your wave 1 here, 2, 3, 4, 5. Now, this, we are in a correction phase of, now here, so when we're here, we sold around here. I'm expecting that this level over here is forming a flat correction. Now, the end of the Elliott waves, the end of the Elliott wave was wave 5, okay? So 1, 2, 3, 4, 5. So the 5 form a truncation. This one you learn. We have a course specifically for Elliott waves. So we have a course specifically for Elliott waves, okay, where you would understand. Let me show you guys. Let me show you guys the Elliott wave course, so that, let me show you guys the Elliott wave course. Okay, so this is the Elliott wave course. So you see, all what I'm teaching you, there is a course for it. Okay. There is a course for it. So we have about 24 complex corrections that you have to learn in substitution of parties. And all these things, there are some that you cannot memorize them, but you can have a clear view of how they were. And these are Elliott waves. Okay, these are Elliott waves. This is the truncation of these are Elliott waves. So the numbering that you see over here, they are there. Okay, now let's go back to whatever we're doing. So when it comes to wave 5, now I'm expecting a flat correction. So we had a break, an ABC. So ABC, another ABC, 1, 2, 3, 4, 5. So now here, if it doesn't break to the top to complete the X, then I'm expecting a 5 waves. Now the 5 waves should be A, B, C. Now here should be a flat correction. Let me remove this one so that you see it well. So let me move it. So I am expecting this one to be more or less like a flat correction. So the tools needed for my analysis are the ones that I've brought them here. Okay, when you do STR strategy calls, I'll show you all the tools that you need so that you don't go and look for them. So you have 1, 2, 3, 4, 5. Okay. So at this point, any cell move should bring it down. Now, once it brings it down, it should complete the flat correction. It's going for more or less like a complex correction. So we'll have a flat here, then an X. So 3, the flat will be 3, the X zigzag will be 3, so 3, 3, 5, which will complete a complex irregular flat correction. This one can even go above here. It can even go above here so that the white will come down so that it will complete a very big complex correction. And this one, you can learn it. I mean, my Elliott wave course is 5 days. So when I tell people I teach in 5 days, my Elliott wave course is 5 days. I just completed one yesterday. So it will form a regular flat correction. Now let me show you on the chart, in the course, what I mean by the irregulars. So these are the triple threes, but I want to get the irregulars. Okay. So irregular complex. Look at this. complex correction. You can see complex corrections. Okay, so let me see whether I can get the irregular. Okay. Look at this. The flat ABC X. You see what I was telling you? ABC X, then they move down. Okay, so this is what we saw as ABC and the X. So this is what we saw as ABC, the X, and then move down. Okay, so when we go here, we have here ABC. So A, B, C, X, and then move down. So that to form a complex, irregular, flat correction, then the up move. So that's what I'm thinking for pound JPY. Okay. Oh, this pound JPY, sorry. Someone is looking for the pound JPY. Pound JPY. I expect this one to break it a little before coming down. Okay. Okay. Now, someone was looking at, let me see AUD JPY. The same thing. This one too, the same thing. It's not a pair that I want to look at. It's not so clear to me. But you can see that it's having a more like wow. You see, you guys fail to look at the higher time frame. Look at this. You see, it tied there, it tied there, tied there, tied there, tied there. What do you think it will do? So what do you think it will do? Guys, drop your AD card. Okay, I'll look at it. What do you think? What's your prediction for ADJPY? So I've given it to you. Okay, thank you. Thank you. So if you don't see it, then we feel for me for money. Okay. Okay, so AUD card, let me look at AUD card. This pair has been mafiaing me for some time. You guys love complex. Oh my God. There are some pairs. Me, if I'm to trade this one, there's an imbalance. It came to fill it. Okay, so I'll be looking for sell. But you see, this thing is very tempting. Look at it, there was break of market structure here. There was a retest. It can also go up. $50. On forward. There are two scenarios. It's either you have to look at the overall trend. I have to look at the overall trend first. But it can also go for cipher pattern. Okay, it can also go for cipher. I just have to look at the two sides of the coin and see the one, because once I see a break of market structure, that means that it's bull bias. Okay, it can go for this before dropping. Okay. When it does this, it can go for this, then maybe drop from here. Okay. It can also drop. So I just have to look at the higher time frame. I have to go more higher to see what is happening over there. Okay, it has not completed yet. It has not completed, so it has to drop. Now, harmonics, this one is 38.2. So I feel like it has to drop. Where is the harmonic pattern? 38, so you have to drop to 88. So we'll have this. Will be this, and drop to 88. Okay, so impulse, correction, impulse, correction, impulse, correction, impulse, correction, impulse, break of market structure, retest. This was the break of market structure. So it becomes the B of the harmonic and drop. Now, that's why I use that one as the B of the harmonic pattern. Okay. So that means that we'll have it has to go to 88 because of the fib level. We just don't use any fib level that comes into our mind. Now there is harmonic cheat sheet that I've designed for my mentees. Let me show you guys. Here's the Telegram. So when you go to the here, this is the harmonic cheat sheet. Okay. So these are the numbers that you need. The numbers. These are the numbers that you need. Okay. Okay. So if we are to go to this level, then this level over here I'll not look for that bull trend. I'll rather see this one as an imbalance that has been filled. Okay. And look for a drop. Okay, so it will be more or less like, let me measure something over here. I think there should be a trade drive pattern formation. Okay. 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 So it will be more or less like a trade drive pattern formation. More or less like this. Okay. Oh, this is not the pattern. You see there is trade drive. All the patterns have this thing here. So we have this. Okay. So I'm expecting more or less like a trade drive pattern formation. That means that here there should be, I'm expecting more or less like an equal high. And drop to complete this whole thing, so that the whole pattern becomes a pattern formation from here. Okay. So this is what I'm expecting on AUD card. If it should break this level, then that means that this cipher pattern will hold. This, if it should break this level, okay, if it should break this level, then this cipher pattern will rather hold. This one will rather hold. No, it's not even cipher. Sorry, guys. It's then this butterfly pattern, it should be a butterfly. If it should break this equal high, then this butterfly pattern should hold. That would be like 1.272 Fibonacci level. So let me see. You can see 1.272. Okay, if you should break this equal high, then that means 1.272. But for now, I am sell bias for AUD card. Okay. So just type MOP if you love the analysis. Just type MOP, money over poverty. Just type money over poverty. And please, if you've not subscribed to the Smart Forex trading course, make sure you book your seat and get a, see, you might think you are experienced, okay? You might think you are experienced, but you don't have a very strong foundation. Maybe there are petty things that can make your trades or can keep you consistent. I can be in a trade for like 1 month, 2 months, 3 months, and my account will not blow. It's because I'm doing something different. It's all about risk management. Okay. If you're able to pre-calculate your risk, I have some tools that I'll be giving you guys as to how to calculate your risk and everything. They are there. So please make sure if you need a strong foundation. There are very good traders who don't have a strong foundation. So they make petty mistakes. You can be very good on the market, but if your fundamentals, the rules of trading, you lack very strong foundation, you might blow your account. So this is almost free. I normally do it free. This time I added $25 so that serious people will join. After all, when people come to my classroom, they use free internet. So at least it's fair. Okay. I want serious people to join. Only 100 people. The slot is for only 100 people. If you've not paid, make sure you paid. If you're in Nigeria, you can use USDT or Bitcoin. If you are in Nigeria, you can use USDT or Bitcoin. If you are in other African countries, yes, you can use USDT or Bitcoin. And if you are in Ghana, strictly mobile money or bank. And we are even connected with Visa card. So our company is well structured that we have Visa card. And once you want to pay with your Visa, we can send you an invoice that you pay directly on Visa card. So if you've not booked your seat, make sure you book your seat. After this course, we have the STR strategy course that is well advanced. That way you learn this harmonic pattern, some of the Elliott wave corrections, and you learn some sort of smart money that is used in the STR strategy. You also learn divergence, which is part of the STR strategy. So the STR combines smart money, Elliott wave, divergence in one strategy, and harmonics. The foundation is harmonics in one strategy. So that one is $200. So I think that one will be in 2 or 3 weeks time. Then people who want to be Elliottians, those who want to master Elliott waves and the 28 corrections, who want to rack their brain to the next level. They want to tap into my 15 years of experience. They want to get all the 15 years of experience in their head within 1 month. The Elliott wave is just a week course. That one too is there. So we have 3 courses. We have the Smart Forex Trading course for beginner intermediate, where you learn price action trading. We have the STR strategy course, which combines harmonic trading, smart money, divergence, and Elliott wave correction. Then we have the Elliott wave course proper, where you reach at that time, your mind will be open to absorb higher level of learning. Then you can do Elliott wave. Once you pass the Elliott waves and you're able to analyze proper with Elliott wave, then you can confidently be called an Elliottician. Okay. An Elliottician is someone who has mastered the art of Elliott wave. Okay, so that's all I have for you today. Make sure if you're not subscribed to my channel, make sure you subscribe to my channel. Go on YouTube, look for Dr. Harmonics. This video will be on YouTube. Go on YouTube, look for Dr. Harmonics and subscribe to the channel. And don't forget to join my Telegram channel. I've pinned it on Instagram. Make sure you join. If you're on YouTube, to go under the description of all my videos, you see the Telegram channels. Make sure you join the Telegram channel. And until we meet again, remember, it is money over poverty. Peace.